Hi guys, welcome to another episode of The Aspiring Entrepreneur. Welcome to our stock recap. It is Wednesday, January 27th, 2021. And what we do in this video is we just go over the stocks that we cover in our Sunday night video. I just basically do some basic technical analysis and just kind of go over some price levels and levels of interest, maybe some news that might have come out in a stock. With that said, guys, I hope you're doing well. I'm actually having a record-breaking month this month in January. It's been solid. It's just a lot of interesting events going on. We know all about, obviously, the Wall Street bets on Reddit, and we know that the hedge funds are, pushing back and they're trying to get SEC regulations. And, we could briefly sort of talk about, we're all about, having sort of, let's say, the average trader be successful in the market. But, also understand that even though hedge funds, we may not like them in some cases, they may be going against our trade, they're still at the end of the day regulated by the SEC, right? So if you're, for example, a hedge fund, you essentially have oversight by the SEC, rather than, let's say, a trader who maybe doesn't know how to trade and then hears about all this momentum and sort of jumps in, and then let's say a stock tanks or a stock blows out their short position. And so a lot of people are just sort of jumping in the market right now, and, they're going to come in as fast as they're going to probably leave the market. Just before I turn on the recording of this video, GameStop just tanked from, the 300s down to 220, and then it just got bought up right back up. So there's these sort of manipulated games that happen that most traders, most people who are sort of new to trading don't know about. And so me personally, I've been selling puts on a lot of these crazy momentum plays where I know that the value of the stock at a certain time frame probably won't hit, so I can sell puts, I can earn premium, and I can cover my position if for whatever reason I feel that I'm in the money, or I don't think it's gonna hit and I just want to play it safe. Like, for example, that I did that with AMC today because I felt like AMC is most likely gonna tank, and so I covered my position. And they've been super solid trades. They've been my most green trades of the month. But for a lot of people trying to ride these momentum plays, how do you ride something that's going up 10, 15, $20 in a candle? And so for a lot of new people, this isn't the type of trading. If you want to be in this game for a long time, you have to have sort of a risk management plan. You have to understand, where's your entry going to be? Where's your exit? And if it doesn't meet that criteria, if something doesn't go per plan, like, what's your exit plan? What's your risk management plan so you don't blow your account? This is purely, a lot of these just white squeezes, they're gamble plays. And so, yeah, it's trading, and yeah, there's definitely levels that we're going to talk about today. But for the new trader, that's the concern that I have, sort of, that versus compared to, like, let's say, being oversight with the SEC and having oversight with the SEC, is that there's these traders that are essentially almost like victims, right? They're just sort of following the crowd rather than having some type of, sort of accountability with other people who might be advising them. So with that said, guys, I just hope you have a risk management plan. We've got some exciting things coming on the channel. I got an interview coming up, another guest interview with a friend of mine who started a food truck business. So we'll check that out. We'll be doing that interview this week, so I'll have that video for you guys probably next week. So starting with Apple, did report earnings, solid play. It traded as high as 144 and 30 cents today, and traded as low as 140. And then you can see in after hours, once the sort of report came out, Apple just blew away expectations, similar to AMD and a lot of these stocks. It blew away the expectations. And you can see here, it had over $100 billion of sales in quarter 4. And so not only were their earnings per share up and it beat the consensus, but you can see that they had their first sort of over $100 billion quarter. And then you can also see that their sales, their iPhone sales jumped up, and so did their services. So as we expected, Apple's great. Now the problem is, and one of the things that we talked about, right, is look where we're at. We're on the upper Bollinger Band. We're at all-time highs, right? So what do you think is most likely going to happen, even if you have blown away expectations of earnings, right? You have profit takers, you have sellers, you have people who have had this pre-anticipatory run, and now that the earnings are out, they sell it off, right? And they get their profits and they move on to something else. I'm not saying that Apple's going to tank and go back to like 107 like it did in the last earnings, but what I'm saying is I do expect more of a sell-off, and we could potentially get something into the high 120s coming up, and we'll see how the market reacts. Just like AMD today, right? AMD actually got price target raises, But you may notice today that it opened not only lower, but all of the price targets were well over $100, and yet it tanked. And it's not even trading at all-time highs. So basically, that just tells you that a lot of people are going to now, be on the cautious side, which is ride the pre-anticipatory run on the earnings, and then once it sells off, look for that dip buy. And in this case, we've labeled several levels, and like I said, I would look here, probably 137 is where it's at right now, and I would look for more of a flush to maybe the 20-day, which is around the 132 130 level. And then, like I said, if we get down here in the 127 level on the morning flush, look at the first 15 minutes and see how Apple's trading. And once the first 15 minutes of the day is over around 6:45 Pacific time, kind of see where you can get a good dip buy into Apple and go for a long. I mean, we all love this company. We know it's not going anywhere. Solid buy, record-breaking quarter. Can't ask for anything else. So with that said, guys, like I said, again, earnings play, always a sell-off. Look for the dip buy 15 minutes into tomorrow. And like I said, anything in the high 120s or in the low 130s should be a great buy. And then we should be able to recover this. But, we'll probably see about a 10% haircut from the top like we did up here. And so, like I said, I could see this risking down to 128. Okay. The next stock we'll go over is the same thing. It's going to be Tesla. And I actually wrote Tesla after the earnings. I was able to capture this long here on the 15-minute chart. And of course, it came back up. It retraced very well. And that's the thing, is a lot of these manipulators and market makers, guys, they're trying to tank these stocks, and they want you to sell the shares because they're the ones buying it, right? They're selling them and buying them. And so a lot of people might have freaked out, thought something was wrong. Well, the earnings were great. Same thing with Tesla, is they're blown away with deliveries. They're basically, given good guidances, forward guidances, and they're meeting expectations. But same thing, we're trading at all-time highs, and we just broke the 900, and we have this sort of top here. It looks like we've sort of tested the high 90s 3 times now. And so my expectation, honestly, and I am a Tesla long, but just seeing the behavior of the stock and how high we've gone, obviously from 400 where we were pre-S&P, what I say is, we drew this sort of light green line, which you can see here on Sunday night's video, and you can see twice in the aftermarket, we've actually bounced off of this, right? We bounced off of it here, and now we're consolidating on this area of 820. So we've labeled that, and the reason why, again, it's a thin line is we call it a soft support. It's not necessarily where we go heavy. It's where we can start dabbing into a long position. But like I said, just based on the behavior of the fact that the stock is trading at all-time highs, I really like to see something in the 700s. I see this 50-day support at 675. I'm not necessarily saying we quite get there, but having a healthy pullback won't necessarily be a bad thing for Tesla. When you have a stock that's ran up so much, you have a lot of people holding onto the stock. We've talked about this in the past, and they're not selling. It's really hard to sort of push the stock up. So you can see that the volume has really died down on Tesla. So our average volume is around 35 million, and we traded about less than that, about 27. So you can see it's really died down. So when you don't have a lot of volume and you don't have a lot of volatility, the stock just sort of stagnates and trades sideways. So yeah, if you're long, you're still profitable, but we really need this haircut and start flushing out people and get the sellers out. And that's what we did here, right? We pushed this out. We had the biggest volume bar when the earnings came out, got some people out, and now we're buying it right back. The shorts are covering their position right in this candle. And so we need essentially a pullback, a healthy pullback, and it could be to the 50, right? Or it could be, again, we've been bouncing a lot off of this 20, which is the 805, 806, which is actually where I bought my first long today on the aftermarket. And that was also where I bought here a couple weeks ago. Is the 805 has been a good level for dip buy. But if we can get a healthy pullback, like I said, I can definitely see something back in the 700s. And we did test 798 today, and like I said, I can see at worst case a bounce at the 50-day. So if I were you, definitely don't go heavy at Tesla at the 620. See what we can get, once again, similar to Apple, the morning flush, and see what Tesla wants to do. And if Tesla looks weak, you can always let it sort of fizzle out and wait for it to sort of recover or show some type of recovery. But for now, you can see we're still on the overbought sign on the RSI indicator, or anything over 70 is overbought, and we're trading right about there. You can see we have some negative momentum here. And so I wouldn't personally want to be back holding Tesla at 890 for now. I would look to dip buy in the 700s, preferably in the low 700s, and then, like I said, ride it for a long. And of course, we can see this thing going to 1,000, this year for sure. Okay. And, one of my favorite stocks, Palantir, I mean, just solid. I actually got involved way early. I just happened to be up. pre-market, and I was able to get this really good dip buy here at 31. I think my entry was like 31 like 50, and it was just an instant winner. Obviously I didn't hold on to it. I do scalp pre-market. You don't want to hold on to positions pre-market because of the risk of what happens when you get these massive volume bars. But you can see that we actually had this sort of squeeze in the sort of middle of the day all the way up to 45, which was just incredible. I mean, from a stock that was 25 last week to 45, I mean, this is just you know, if you're long position PLTR, if you got call options, I mean, this was awesome. So we had this sort of triple top, and then we sold off. So this was a squeeze. I realized it was a squeeze. I actually took my first short position, believe it or not. I've always been long, but I did take a short today because I saw what it was doing, and I took it out probably a little too soon. It was actually, you know, it came back down to this sort of consolidation level, which we identified previously as a resistant, and so we sort of consolidated that. So we can technically change it to a support and show it as a green support, but in this case, because we sort of bounced and then we failed, I'd like to keep it red, even though, like I said, it technically broke the resistance. I want to see it actually hold above this level, okay? And so since we broke down, and you can see we're breaking down now to 36, you know, we indicated that this was going to be a breakout. We called that before this happened. I believe it was on this day here, and leading into demo day, we had this massive breakout. And so what we're going to see is, as this positive momentum sort of fizzles out, we should start seeing this thing come back down. And I'd like to ideally go heavy around 29.50, but we've seen several levels. You know, 32 it's bounced off to that 32.80, 32.50, but 29.50, which is that level we had when we had this sort of crash here, the bottom on I believe this was Monday of 29.56. So that was a level that we identified also as well, right, as our soft support back here. So again, guys, great stock. Next catalyst is really going to be the earnings. That's coming up in a couple weeks. But do please keep in mind, guys, again, that you have a lockup period where early investors will be able to sell their shares. So please just be cautious of that, and know that most stocks, if you look at the history of stocks, when that lockup happens, and of course you have people who want to cash out their positions, you're going to see the price most likely sort of go down, because obviously there's more shares that are being sold in the market, and that could increase the volatility of the stock. Again, if you're long bias, which I've been back in the 20s, you know, again, you can obviously add to your position, you can sell your position. I mean, my goal ultimately for Palantir for the next couple months was 10 points, and you got more than 10 points out. You know, from essentially last Thursday, you've almost got 20 points now, from 25 to 45. Okay. And then of course the most fun stock. So like I mentioned in the recording of this video, you know, GameStop has just been an absolute tear. It's changed everything we've known about trading. And so we, again, had this massive market push. I mean, we may see $1,000. Who knows where this thing's going to go? We know it's free fall. We know that it's, you know, sort of been, you know, from, you know, a $20 stock a couple weeks ago up to, you know, 300-ish. Lot of manipulation here. So before the recording of this video, you can see with heavy volume that the stock was trading around 317. It came down $100 exactly, and then it came back up. And then, of course, it tested the lows again, and then it retraced and finally made its way back up to 300. And now you can see it's sort of making a higher high and a higher low. And so, again, it's a manipulation game. If I'm a new trader watching this video or in GME, I don't know. All I see is, you know, 300 to 250 to 220, and I'm like flipping out. I see my P&L or my long positions, because most new traders don't day trade. They take swing positions. They take long positions. So, again, the people who are most likely just jumping in and throwing the dice here, you know, again, if you're at the 30 and 50 and $70 level, yeah, you're in the money. But just cash out, please. Just do me a favor. Just cash out half your position, 3/4 of your position. Leave a lotto share, right? If you win the lotto, it goes up to 1,000. I was wrong with the stock. I thought when people were bag holding at 150, it was too high. But at the same time, you know, obviously I was wrong, and this thing went up to 350. And that's the problem, guys, is it's unpredictable, and you can't predict it. And when you can't predict something, it's basically a gamble. So just have a plan. Hopefully, if you've killed GameStop, feel free to post a comment below. I'd love to read your story. Just a real funny story. And of course, you know, the S&P was just down significantly. You can see we sort of just made lower highs and lower lows, and we were just trading under the fast moving SMA line the whole day. So it was really just a down day. That, you know, it seemed like we were going to rebound, and we never really came back. And again, you know, when the market does this, it's not a bad thing, right? If we're heading to the 50-day support, you can see here at 370, not a bad thing. You know, we want pullbacks, we want opportunities to dip buy, we want, you know, when you're at all-time highs, how much more can stocks move? And so we want stocks to pull back so that we can buy them, dip buy them. And a good example of this that I will add to this video is going to be our friend AMD, right? So AMD, we're getting it at a massive discount at $86, and this is a stock. If you look at when the earnings came out, the high here in this candle on the 15-minute chart was what, $99.98. So why didn't it hit $100? Who's manipulating the stock? And so, you know, again, with this pullback, look what we got, guys. We got after the first 15 minutes, we got all the way down to $86, and we retraced. I had mentioned the high today would be about 92, which we did get, which was awesome. So you got a 6-point retracement just on waiting, being patient, seeing that the buyer stepped in right after the first 15 minutes of all the sellers, and then you can see that you retraced most of that move to where we essentially opened. And then of course we sold back off when the market got, you know, sold off even more, right? So just, you know, guys, you know, understand that when you're trading a stock at all-time highs, it's going to pull back, especially after earnings. The expectations are high. There's a pre-run. And just try to keep your risk management plan and have a plan. Don't follow other traders. We do these videos just to help people, to make suggestions and encourage and try to help each other. But we're not really here to tell people to follow us or, you know, to do a trade that I've done. Although I do share, you know, the trades I did today, for example, which is, you know, buying call contracts down here and selling them on the push to 92. Right? I bought a ton of shares. I mean, I was just scalping shares pre-market, did really well. Of course, went and bought shares again. So I probably did 3 rounds of buying and selling shares, but buying the calls. And then of course I bought more calls down here. Why is that? Because every price target on AMD right now is over $100. And when you have a stock trading at $88 and your price target is $110 to $130 and AMD is absolutely crushing it, and you're also selling below the 50-day and you're oversold completely, this is the perfect day to buy. Okay, guys, so with that said, best of luck trading. It is raining outside. Probably saw some pop-ups and hear some background noise. But anyways, I'll talk to you guys later and have a good day. Take care. Bye-bye.